Good evening, Garage Gang. It's Wednesday night in the garage, and your boy Avatar John has the wheel. Tonight is pure alpha. Bitcoin sprinting near 118,900, Ethereum revving around 4,270, and Solana gripping the track at 223. ETFs are inhaling billions, fueling this meltup. AI is on fire. Anthropic just dropped Claude 4. Nvidia and TSMC teasing quantum chips. And Amazon rolls Alexa Plus with on-device brains. Washington ducked a shutdown, but the debt ceiling battle is right ahead, and oil's heating up on Red Sea chaos. And Christian, Triple X, is back in the pit with the dirty trench plays. The kid's been hot, got rugged once yesterday, loss was minimal, and every real trader takes a bruise. But overall, he's still up and ready to deal some degen heat. Smash that like, hit that follow, because it's about to get real. Here's the take. Markets look strong on the surface. Equities holding, credit spreads tight, crypto pumping, but underneath, it's fragile. Central banks are pulling fuel out of the tank, while private bank credit just blasted past $34 trillion. That's the nitrous keeping this rally alive, but it's not permanent. The MOVE index is calm at 77, way too calm for what's brewing. High yield spreads are squeezed down to 2.7%. Cycle tights, no one charging for risk. The dollar is weak, classic risk on tell. But the skew index, 140 plus. That's the pros paying up for crash insurance while retail's still partying like nothing can go wrong. This isn't balance. It's a barbell. Melt up on one side, sudden crash on the other. No middle lane. So here's our take. And just so we're clear, this is not financial advice. You need to stop chasing passive beta like this is a Sunday drive. It's not. It's Formula One. You drive every lap or you're in the wall. The real money is in mismatches. Solana versus Ethereum, that's where you squeeze edge. And you hedge your tail risk, because the left side of the track is where the wrecks happen. Geopolitical shocks, credit crunches, liquidity gone in a blink. That's the garage take. ETFs are sucking up supply like a vacuum. Bitcoin pulled in 500 million in a single day. Ethereum, 600 million. Stablecoins printed another 1.5 billion. That's not noise, that's structural fuel. That's long-term cold storage, and it doesn't flinch. But don't get it twisted. Futures open interest is sky high, leverage everywhere. That means every pump goes faster, but every slip can cascade into liquidations. So here is our take. And just so we're clear, this is not financial advice. Respect the flows. They're real. But leverage cuts both ways. You can ride green candles straight into liquidation if you're sloppy. Position like a pro. Size with discipline. Peel profits. Because this market pays the sharp and punishes the sloppy. AI isn't hype anymore, it's horsepower. Anthropic just dropped Claude 4, sharper reasoning, multimodal, a real operator. Amazon's rolling Alexa Plus with on-device brains. Google flipped to AI mode, turning search visual first. And Nvidia with TSMC, they're teasing breakthroughs in quantum computing. You've heard of the quantum realm in sci-fi movies? That trippy space where physics bends and everything exists in multiple states? Well, this is the first step toward that in the real world. Here's the truth. It's still not stable yet. Quantum machines are noisy, fragile, frozen near absolute zero. But the fact anyone is beating their chest on progress, is a big deal. This isn't chicks stacked tighter. This is qubits, states that can be 0, 1, or both at the same time. That lets a quantum system run countless probabilities simultaneously. Problems that take supercomputers years could collapse into minutes. So here's our take. And just so we're clear, this is not financial advice. Quantum isn't sci-fi, it's industrial war. Think Manhattan Project for compute. The West hoards, the East leaks, and crypto sits in the blast zone. If encryption rails crack, only adaptive chains survive. If compute costs collapse, AI agent tokens can go vertical. Don't confuse this with 4 GPUs in a rack. This is rocket fuel strapped to a gas car. If it stabilizes, the game changes overnight. Gaming is where culture, liquidity, and speculation collide. It's the on-ramp for the next 100 million users. Crypto gaming sits on a market cap of about 21 billion. About 40 AAA titles are active now. Solana leads with 50,000 daily actives. Ethereum has 20,000, Polygon 12, Base 7, Sui 6. Solana's footprint dwarfs the rest. Tokens are telling the story. Immutable up 10%, Axie up 7%, while Sandbox and Gala are bleeding. Strong hands show fight, weak hands slide. Spotlight, Cornucopias, a multi-chain project rooted in Cardano, with Copy also on Ether and BSC. More than 3,000 daily players and NFT liquidity up 20% week on week. Shrapnel on Avalanche is in beta with 50,000 testers and reworked vesting cliffs. Illuvium on Immutable is live with 500,000 players and 200 million liquidity. Off the Grid on Avalanche already has 100,000 alpha testers. But here's the reality check. I've got Christian and Thomas, our resident gamers in the garage. They don't care about tokenomics, vesting schedules, or liquidity charts. They care about one thing. Is it fun? That's the strategy crypto gaming has to embrace. Fun first. The days of building a token, slapping a Mario Kart skin on it, and pretending it's a game are over. So here is our take. And just so we're clear, this is not financial advice. 90% of projects are trash. Scratch offs at a gas station. But the 10% that put fun first, cornucopias on Cardano, Shrapnel on Avalanche, Illuvium on Immutable, that's where culture meets rails and sticks. That's the garage take. Now we leave AAA gaming and head into the trench. And tonight, it's not Vegas, it's Reno. You walk into Club Calmiva Casino. The place is beat. Carpet worn, neon buzzing, slots sounding tired. You don't even know why you're here. Your boy swears the machines are loose. But to you, the only thing loose looks like the cocktail waitress. Since you're here, you keep your eyes on a swivel. Know your surroundings. In a joint like this, if you don't bring the right tools, sniper bots, rug checks, liquidity scanners, you're just chum. This is Christian's pit. Triple X has been hot. He got rugged once yesterday, took the loss small, still net green on the day. That's trench discipline. Tonight's sturdy picks, weed, big liquidity, mid 8-figure cap, but mint authority still open, scalp only, no vows, SAMI, traction, volume, but shallow holders. That's momentum, not conviction. GOAT, hours old, noisy, pure table minimum play. You pay for the seat, maybe grab a drink, but don't expect a buffet. So here's our take. And just so we're clear, this is not financial advice. The trench is Reno, sticky carpets, broken promises, and a game that's always tilted against you. You size small, peel profits, respect the rug. That's how you walk out with chips instead of stories. That's the garage take.
Now let's step into Lulu's classroom. Before we talk levels, here's the framework. I always run 3 time frames. 1 to 5 minutes for scalps, 15 to 60 minutes to confirm trend, and the daily for context. One chart alone lies. The 1 minute shakes you out, the daily hides the setup, but stack them together and probabilities line up. That's when you take your shot. Then I anchor it with moving averages. The 200 MA is the backbone, the river. If price is above it, you're with the flow. Below it, you're fighting current. The 21 EMA is the pit crew. It shows momentum right now. If price hugs it, trend is strong. If it cracks and can't reclaim, momentum's gone. That's how I caught BTC into 118K and ETH into 4,369 today. 1 minute gave me the trigger. 15 confirmed momentum. Daily said Uptober bias still bullish. Bitcoin is sitting around 118.9. Over 119.4, we sprint to 120. Shock scenario, back to 118, then 117.2, then 115.5. Ethereum consolidating near 4,270. Over 4,290, we're at 4,320, then 4,350, lose 4,240, and we slide to 4,200, then 4,180. Solana holding 223 after tagging 225. Over 224.5, you sprint to 226, then 228. If it breaks down, supports are 220, 216.5, then 212. Cardano chopping 85.5 cents. Over 86.5, it runs to 88, maybe 90. Lose 84.5, it slides to 83, maybe 80 flat.
So here is our take. And just so we're clear, this is not financial advice. 3 time frames give you vision. The 200 MA tells you the river. The 21 EMA shows you the current. Align them and you catch trades that run. Fight them and you drown. That's the garage take. All right, garage gang, that's tonight's lap. You've seen the flow from the big macro handoff to crypto ETF fuel to the AI horsepower race to gaming as the Trojan horse, down into the Reno trench, Lulu's TA discipline, and the survivors at Circa. Now, before we close the garage doors, the website is up. GuruCryptoGarage.guru. It's a work in progress, but it's live. Go check it out, poke around, and let us know what you think. This is built for you, the Garage Gang. So your feedback matters as we keep tuning it. Make sure you smash that like, hit the follow, and share it with your fellow DGens. Because the more the garage grows, the stronger this community gets. And most